And we are live, ladies and gentlemen. It's been a long, long time since I've done a live broadcast. Obviously, you guys know me. I just recently became a father, so I've been kind of incognito, and I'm moving out of the city as well. So my time has been limited. But I was thinking, well, who should I have back on my first ever live or reintroducing live? And I'm like, my good friend, Brad Mills.
Thanks, man.
We always have good conversations about the most random shit possible, and I really enjoyed them. And I think, especially now today, with all the excitement of the crypto markets, primarily Bitcoin trying to reach its all-time high, and so I think it's kind of fitting for us to go over what's happening within the space, your viewpoints on this, and where do you see Bitcoin heading from here? Not just from financial. I think that's the easy conversation. I always find it interesting when people talk, oh, what about Bitcoin? Okay, you buy it, you hold on to it. That's it. Conversation's over. You know, there's not too much more about it unless you're like a trader or hedge fund, you're moving positions. But what do you see currently happening on the macro level? Why do you think all of a sudden you see companies like MicroStrategy, and even here now in Toronto, I think it was a publicly traded company called like Cypherpunk. They went into Bitcoin holdings as well. So what's your viewpoint on that?
Yeah, Cypherpunk Holdings is the company that's the Canadian one that's been converted all of their other cryptocurrencies into Bitcoin. But also, Amir, you're still blowing out just a little bit. So maybe
really?
Reduce your volume a little.
How about now?
I don't know if anybody could say something in the chat to confirm, but maybe it's just...
Yeah. Tell me in the chat, yeah.
How does Amir sound? Does he sound good? That sounds better to me, what you just did.
Okay.
You just turned a knob down or something?
Yeah, I got this new mixer, the new Focusrite TI2 whatever. I don't know yet. I just plugged a bunch of random shit into it. So
all right. Well, you got a bunch of people saying you sound great.
All right, cool.
So yeah, I think it's the same thing that we've been expecting for a couple of years, ever since 2017, when things started to go nuts and there was this big obsession about Bitcoin with Wall Street traders and stuff. And like one of the main things that kicked off the 2017 bull market was the canary in the coal mine, Wall Street traders. They were always talking about Bitcoin when they're away from their desks, you know, on the weekends and stuff. They were just talking Bitcoin, and you see the volume move to Bitcoin in after hours trading and on the weekends. So that has taken 3 years to get to the point where we all thought it was going to be, that these institutions were going to come, right? It was Novogratz coined that the herd is coming phrase, right? And we heard that how many times through 2018 and 19? The herd is coming. The herd is coming. Well, they weren't stampeding. They were just trotting away, trotting along, and now they are here. It seems like, I mean, there's over the 2 years of bear market, there was a lot of influential macro people that were educating people about Bitcoin, starting with like Tur de Meester. He had his really widely circulated paper that called the bottom of Bitcoin and said that we were in reaccumulation phase. And then you started seeing, just after that point, that's where you started seeing a lot of the wealthy institutions and high net worth start to accumulate. And then like Real Vision, Raoul Pal, and all those guys started to talk about it a lot. And just like macro guys started to talk about it. And as it became more and more of like not a crazy thesis for somebody that's a macro person or a regulated trader, institutional trader, whatever, to consider Bitcoin. This is what we're seeing now. It's kind of like manifestation of all the things we've been saying for the last few years. It's actually coming to pass. There's more institutional demand for Bitcoin than there is Bitcoin being minted. So this is what happens when there's more demand and there's supply. Like the price goes up. So it's exactly what everybody was thinking about.
Do you think this is like a net benefit for Bitcoin? Or
you're blown out again, Amir.
It can't be, really?
Yeah, because I can hear your like clicks and stuff too when you're clicking the mouse. I don't know. Can anyone else hear that?
I don't think so, man. I think it's just you. Get some crazy headsets.
You're getting lots of positive comments on your stream.
Listen, I'll try to fuck around with the audio to fix it while we're talking. But I want to say rebuttal, but I'll play devil's advocate over here. Do you think any of these institutional players coming in is a net negative for Bitcoin? Because I've been hearing a lot of different viewpoints of like, well, everything's going to be regulated and KYC, then AML, and like for me, like defeats the whole premise of what Bitcoin is from the very start.
I like to think about it like Neo at the end of the Matrix series, when Neo stops fighting Agent Smith and just lets Agent Smith like do his virus suck right into him, and then he converts Neo, and then Neo actually subsumes the entire system and blows up the system. And that's kind of the hope that I have, that yes, Wall Street and the institutions are starting to get an unbalanced, dangerous voice in Bitcoin, and they're starting to control more of the supply of Bitcoin. But hopefully that the ideals and like the cypherpunk theories and philosophies and the libertarian ideas will permeate the Wall Street, whatever you want to call it, the veil. Or
do you think the narrative and the ideologies of Bitcoin will slowly cross-pollinate into Wall Street?
Well, hopefully, because what I'm thinking is Bitcoin, first and foremost, is decentralized and censorship resistant, right? And the digital gold narrative won out against the peer-to-peer cash narrative. That was the big first battle that Bitcoin had. We had to fight each other. We had to kind of fight the other Bitcoiners that wanted to scale Bitcoin in a way that would have compromised the decentralization. You need to be able to run a node with as little of a resource computer as possible. Like, you should be able to run and sync a node on consumer grade hardware that anyone can afford and anyone has, because then the threat that anyone can run a node is enough to keep Bitcoin from being censored and stopped. Just like BitTorrent is not stoppable right now because too many people can just run BitTorrent and seed torrents, right? So it's illegal to pirate movies, but people still do it. The enforcement costs are just too much. So by increasing the block size, even though it would have fixed the problems of the high fees and all that stuff, it would have in the long run changed the dynamic of Bitcoin censorship resistance, because once you change it once, you can then have a government come in and lobby and say, well, look, you guys changed it already. You forked for 2 megabytes. Now we want to fork so that the OFAC list is enforced, or we want to fork so that you remove transactions from North Korea or originating from Lebanon or whatever, wherever they want to ban, right? So that was the first battle that Bitcoin won, was actually the internal battle against the other Bitcoiners who weren't clear on why Bitcoin is so important in the first place. Not because it's just peer-to-peer cash and digital gold. It's because it's censorship resistant.
I think that's the fundamental value prop of it, out of anything.
Yeah.
Because everything else is secondary. Everything else comes with pros and cons. But without the censorship resistance, that defensibility, then it defeats the whole purpose of it.
So it does, but now the problem is that we've convinced a lot of these institutional buyers and people like Raoul Pal and the Real Vision listeners and anybody who's listening to like Preston Pish's podcast, Macro Voice, or that's Eric Townsend, Macro Voices. Preston is We Study Billionaires. Good show.
Podcast, by the way, guys. If you don't listen to it, great podcast.
Epic podcast, yeah.
Yeah.
So all these guys that listen to that, they're like not anarchists, not libertarians, not free market people, not Austrian economists. They're just like people who have money, who want to invest or who want to protect their wealth, and they're looking to diversify.
But they're all American primarily, so they've never been under a real fucked up regime. So I'm just speaking on behalf of them, so I can be completely wrong. But I'm assuming none of them been underneath a regime that they realize. Well, let me put it this way: if you've been underneath a regime that they can just close your bank account down and come with guns and do what they want, you would have a different perspective for Bitcoin.
Oh, of course. Yeah. Somebody like Andreas Antonopoulos that came from the Greek banking crisis, or Wences Casares, the founder of Zappo, that like grew up and saw hyperinflation, grew up as a child, seeing his parents having to like bring backpacks full of money to the grocery store because the prices would change so much. That's different than, or even like what we're seeing now, people in Hong Kong are trying to escape because China's taken over. They're trying to get their money out of Hong Kong. I mean, they're wealthy billionaires, millionaires, whatever, that are trying to escape Hong Kong, get their money out of there. But yeah, most North American investors, they're just like almost weak in a way because they have not had to have that life experience of survival. You know, it's not just investing, but it's more of a survival investing. So to those people, censorship resistance means something, right? Like to anybody that has studied money history and seen the effects of banks doing haircuts, 50% haircuts or 70% haircuts or whatever. I mean, as a Bitcoiner, I've lost like most of my Bitcoins in Mt. Gox. So I've never lived through that myself, but I know the feeling of like waking up one day and seeing your wealth just like evaporate. So yeah, for sure. The people that are forged in that sort of a traumatic monetary event recognize the censorship resistant properties of Bitcoin and the decentralization properties of Bitcoin as the most important, more than somebody that's just say like a millionaire or runs a family office or a successful entrepreneur that exited for 10 figures or like has a successful real estate company or something. They're just thinking like, oh, this Bitcoin thing is hot. I got to get in. The price is going up. I don't want to miss the boat. So going back to your original point, yeah, there is a threat that those people will gain too much power and influence over Bitcoin, and they will maybe wreck Bitcoin. And if we don't guard against that thought pervading Bitcoin.
Okay, so let's pause there. You said something important, and I'm actually curious to hear what's your take on this. I haven't fully thought it through yet. I have some ideas of it, but you mentioned the word guard. So at the end of the day, you know, we've had multiple internal conflicts in Bitcoin, both internally. You had SegWit issues, you had early code issues. I think when was it, the Bitcoin Cash fork? That was 2017, 18, I forget.
Yeah, it was November 2017.
17. So you had that fork into a different network. So you have all these like I'll call them ecosystem issues in the cryptocurrency space. And now you have outside influence coming in, more or less, even sovereign wealth funds. You have nations, even like, for example, with the one Ponzi scheme in China, you know, China had X amount of percent. I think it was like 1% of the total supply.
Yeah.
So that's an interesting dynamic as well. So you mentioned guard. What are proactive steps the community can take to do these proactive guarding measures?
Well, one thing you can do is run a node. You can actually run a Bitcoin node and maybe run a Lightning node and understand. I mean, it's not hard. It's not difficult. You can buy a node or you can just run the software. Learn about privacy. Learn about why privacy is important. A really good follow there is Alex Gladstein from the Human Rights Foundation.
Yeah.
His stuff is great. And like, we should never lose sight of the reasons why Bitcoin was invented and why it's important. It's really a tool of freedom and a way to liberate people that are being oppressed. Now, we don't really feel that here, but it doesn't mean we shouldn't pay attention to it for the benefit of the people all over the world, the billions of people that are needing a tool like Bitcoin. But for someone that's like, I'm just trying to think of like myself, you know, what would I tell myself 10 years ago?
Mm-hmm.
If I was to just discover Bitcoin, I would have been like, oh shit, I can make money off this thing. I can get some moon Lambo here. This is great. You know, like, sure, I'm learning about money and the money system sucks, but what can I do about it? I just want to make myself some money. So I'm trying to put myself into the mindset of myself 10 years ago and like, what would motivate me? Why would I care? instead of just getting sucked into like crypto.
You wouldn't care because you haven't experienced any pain. Unless you've experienced personal pain, you understand the hardships, then you wouldn't give a shit about, from a psychological aspect. But more or less, this lies into the hands of not the neophytes, but this lies in the hands of experienced people who understand the ecosystem, who understand the value proposition of censorship resistance. So like you're saying, a simple thing might be, I don't know, buying a Casa node or some type of node that you can buy out there to run it yourself.
Yeah, well, like honestly, the first most important thing that I think you can do is to watch like a couple of documentaries, like or movies. Like watch The Big Short. If you haven't watched The Big Short yet, watch The Big Short. Watch Inside Job, the story of the documentary that won Best Oscar, and I think it was 2011 or something, about how the 2008 collapse happened. Like just watch a couple of movies. The movie that got me really interested in this in the beginning was called America, Freedom to Fascism. And it was by this guy, Aaron Russo, who was a sort of like semi-famous Hollywood director who wanted to like find out like why we pay taxes and how money is made and who controls the money. And it was there that I found that money was printed by banks, and central banks don't have any real checks on their ability to print, and it's the treasury is in cahoot with the central banks, and that's a private corporation that has private shareholders, and that the people get saddled with all the trillions of dollars of debt that these people are printing that aren't elected. Like there's nobody that elects the people that print the money. So yeah, like learn about those reasons why Bitcoin is different and why Bitcoin is important. Otherwise, you're just going to be looking at crypto and like DeFi and all this stuff as if it's just like looking about how to trade penny stocks or how to trade forex currencies or binary options or how to flip real estate or do our Airbnb arbitrage. Sure, man, like you can make some money in crypto, you can make some money in DeFi. People can trade if they want or whatever, but that's not why Bitcoin is important. And without Bitcoin, none of this stuff would even be around. So first and foremost, get yourself a solid foundation of understanding how fiat money is one of the worst scourges in human history, and how value, like gold, used to be a kind of like a cap on the ability of central banks and governments to enforce violence, because they couldn't just print the money to go to war. They couldn't just print the money and inflate away your savings. So learning about those properties of why money used to be valuable when it was backed by gold, and then understanding the connection between the properties that made gold valuable, which is scarcity and all those typical money properties. I don't want to get into them all. There's like 7 money properties, but scarcity is the most important one, I think. So
scarcity, portability is important, but above all, there's a hierarchical level that's more important than anything, is narrative. Something can have all those properties, but if we don't have a global consensus, a narrative that we all agree upon these things, those properties are worthless.
Yeah, they're like, we've used so many things as money through history. There was that funny example of the Yap Stone. Do you remember that one?
Yeah, it's still is it the ocean? Yeah, it's still there. And like, yeah, we acknowledge that stone's over there.
Yeah, they used these gigantic stones as money, and they would just record who owned what Yap Stone, and they were so big that they could barely move them. They're like the size of Stonehenge, heads.
Yeah, they're huge. Yeah.
So I guess like one rich guy would make a deal or something, and he'd sell his house or his farm or whatever, and then he'd get a Yap Stone, and they'd have to, like, the whole town would move it to his yard. And one time they were transferring one, and it fell over a cliff into the water, and they were left with this weird conundrum of like, well, we can't just go get another Yap Stone. I mean, it's going to throw the whole economy up if we take one out of the circulation. So let's just pretend that it's in his yard. Let's just pretend he owns it. We all know it's at the bottom of the ocean there. We witnessed it go down. So we're just going to write down that he owns that one. And that was a really funny example of a moment in history when it's like, that is proof that not only was it ridiculous that they valued these gigantic stones as money, but that money is a social consensus type of illusion. But even when it disappears, it didn't disrupt their economy, because they were able to just logically say, okay, well, we know that one still exists. We're just going to trade that one on paper now instead of actually moving it around.
The biggest problem, though, it's not even okay. Yeah, they're printing money, and we've been decoupled from gold from 1971 to the petrodollar, and inflation has been increasing. And the United States has printed more money now than it's printed in its lifetime in the last 2 years. How much money they printed? Canada's there as well. Actually, most of the world with central banks, ECB as well, European Central Bank. I think a lot of people really underestimate the time preference when it comes to the money they earn, because regardless of what measures they take to get ahead in life, you cannot escape inflation of the standard living cost. So like I've been screaming about this for the last 5 to 6 years. Is you look at major cities around the world, especially in the United States. Canada's a little bit different when it comes to real estate, but not totally off. But there are similarities. When you look at cost of living in major cities, like for example, Toronto, Chicago, Vancouver, Hong Kong, all of California, all the major hubs around the world, London as well, and you look at the average earning potential of people, and you look at what they get in a salary, and you look at the inflation, they'll never, ever, ever get ahead. Ever.
Unless they do something about it.
Yeah, like, as you and I are talking, I always tell people it doesn't matter if it's $50, it doesn't matter if it's $100, doesn't matter if it's $20, slowly put away into Bitcoin. Out, when I think a lot of people have a hard time grasping what inflation is, how their dollar loses buying potential on a year-to-year basis. They really, really don't understand that. And that's like the most fundamental thing that's stealing the wealth that they have today. And
that's funny. Like I talked to my father-in-law about that recently, like maybe a year ago. I don't know. Did I talk to you about this before?
No, I don't think so.
I was having an argument with somebody on Twitter. It was like more of like a socialist leaning person. And he was telling me that there was no inflation. And I mean, he's just swallowing the Federal Reserve narrative and like the popular talking points of the regular economists that just go on there and say, oh, Bitcoin is a scam and and there's no inflation. You don't have to worry about anything. Don't look behind the curtain. Don't take your money out of the bank machine. We got enough money. Don't worry. So I was like, I didn't live in the last like few decades to pay attention to inflation. So I wonder like what is an older, so I just anecdotally was asking my father-in-law, because he's a Portuguese immigrant. He came from Portugal where they had nothing. Like he didn't even have shoes to walk to school in. And like they had like some land, some cows, and they never kept their money because their money was always deflating. So they would always use their money for like animals or whatever when they got some. And he lived in a really poor squalor. And then they moved here to Canada when he was like 10 or 11 years old. They escaped that. The family just kept all their cash, their Canadian dollars, in the house. Like, they never put it in banks. They didn't trust banks. And I asked him, like, do you think that prices have inflated since you've came to Canada? And he initially was like, no. So I was like, okay, what did it cost you to buy your house when you first moved here? He was like, oh, $20,000. And I was like, okay, and you just built a new one for like $300,000 like 10 years ago. And he's like, oh yeah, I guess that is quite a difference. But I guess because they slowly made their way up into the middle class and there were so many employment opportunities here that they did get some of that upward transfer of wealth. They went from being absolute poverty to the middle class. So even though the prices increased like exponentially, almost like the prices went insanely inflated, they did get a cost of living increase, and they did feel like they were cushioned by the inflation. But
when did he get to Canada?
In the 70s it must have been.
Okay, so if you look at 1971, it wasn't the hockey stick right after that. The inflation, like extreme inflation, started happening. It was a progress until the 90s. So it took 20 years. This is why you see real estate after the .com increase for where can I put cash so it doesn't inflate away. There's a whole reason. Like real estate for a very, very long time, people understand in North America primarily, Canada, the United States, it was flatlined and some years negative, a decrease in value. This is from the 50s till 1998, 1999, right after the dot-com crash. So we'll say starting in the early 2000s, that's when real estate, well, a couple of reasons. One, you had amnesty rules where the Chinese money was coming over, but for the most part, people are trying to figure out how do I, at least knowledgeable people trying to figure out how do I escape inflation. Land is the way to do it. I'm going to put my money in real estate. So it's like a mind fuck when people think now is like, oh, real estate is always, no. In fact, that's not the case whatsoever. We have been flatlined for such a long time in North America. And it's actually an oddity of what's been happening since early 2000s till now. It's not the norm.
In terms of the price of real estate going up?
Yeah, the valuation. Yeah.
Right. Yeah, the buying power of like your house to the dollar or whatever.
Yeah.
But I think the thing with him was like, and after that 70s, 1971, when Nixon took the U.S. off the gold standard officially, and they started to just print and print and print to get their way out of stagflation, that did have some benefits to people because they did have an increase. They felt like they had an increase in their wealth, but their buying power didn't really increase. Prices went up faster than people's wages went up, but like anecdotally, my father-in-law didn't really feel that he was poor or that he was getting his savings inflated away, because he came from Portugal and he experienced real poverty there, so he was like accepting the type of inflation then. But the problem is that now, that's fine for his generation, but for our generation, like the millennials and the Gen Zs, they're not getting the benefit of the inflation from 1970 to now, where they were just printing like crazy, and it was actually going to help people.
Millennials are the first generation. Obviously, I'm just speaking from a bell curve here. So there's rules. There's extreme left. There's extreme right. I'm just talking about the bell curve, the medium norm in the middle. Millennials are the first generation to not acquire their own assets because they can't.
Yeah, I saw a stat recently somebody had posted on Twitter. It was that when you compare the millennials at our age to the boomers at our age, there's a difference of like 5x the amount of wealth that the boomers controlled at our age as millennials.
Yes.
Like
yes.
Millennials own something like 2.5 to 3% of the world's wealth.
Yes.
And at our age, the boomers controlled like must have been like 15% or something like that. So yeah, it's just.
But here's another mind fuck. Millennials will be also the first generation, if you take this linear line of thinking that their parents are leaving them their assets. So let's say whether it's primarily a house, some type of residency, so condo house. It might be some government bonds they had from the early 60s and 70s they still have, but more or less assets in general. So let's use that linear line of thinking. Their parents, which are roughly in that age category right now of, maybe 70, 80 years old, right? They're leaving all these assets to the millennials. It's going to be one of the greatest wealth transfers of a generation. However, there is an elephant in the room that a lot of people don't talk about. If you look at the cost of living, you look at property tax levels, and you look at the roughly declining salaries that people have been getting for the last 10 years, a lot of these millennials that do inherit their family assets will not have the necessary cash flow to even maintain these assets.
Yeah. And even though they may inherit like a place that could be worth $1 million or something, like say in a city like Toronto, they won't have the money to fix it up if it needs repairs.
Well, yeah, you have it's called the 1 to 3% principal rule. So you take the value. So the condo is a little bit different because you have to pay condo fees. So condo fees goes towards maintenance. But let's say you get a house, $1 million house in Toronto, you do 1 to 3%. You need to at least do $3,000 to $10,000 a year for maintenance, shingles, fix that, electrical, plumbing, whatever. There's a bunch of stuff. The constant fixing of a house. So you need that principal down on a yearly basis. Property tax, people forget. On a standard $1 million home in Toronto, property tax is what, $6,000, $7,000, give or take, roughly, depending on the neighborhood you're at. Okay, you have insurance on the house you got to pay. Then what else you got to pay? You got to pay electricity on the house. You got to pay water on the house. You got to pay hydro on the house. You got to pay your. It all adds up. So like the cost of the actual house, and I have rough estimates because I did a whole different deep dive. At least Toronto. So Toronto's similar to some areas. So Vancouver, we passed Vancouver for valuation, and we're slowly creeping up to areas in California. We're about 475 to 565 a square foot here, which is quite expensive. $1 million standard home in Toronto, semi-detached without a garage, so that's a standard. You're looking at rough overhead to keep on a yearly basis around 18,000 just to keep it.
You've done these calculations.
Just to keep it. That's it. Nothing else. And that doesn't go into, is there still a big mortgage on the house that your parents leave you?
So what do you think people are going to do, right?
Oh,
they're going to dump.
Oh, they're going to sell. Yeah, exactly. That's exactly it.
Yeah, and they're most likely going to dump for other assets. Like they're probably going to get maybe a smaller property, maybe like a somebody posted in your chat there that they're going to build a tiny home on someone else's property. That's funny.
Tiny homes, man. I can't stress how draconian laws are. A lot of places in Ontario don't allow you by the rule, the tiny townships to actually build a tiny home. The rules are really fucked up. There's a lot of lobbyist groups out there. Even in fact, when Airbnb, for example, there's areas up north, because my area where my cottage is, we allow it, but it's kind of broken up into townships. Like you go to Collingwood, and people who are listening to this who are not familiar in Ontario, just pretend we're talking about cottage country, about an hour and a half north of Toronto. They actually make it illegal for you to have Airbnb and illegal for you to have small dwellings for you to even make money.
That's insane.
Insane. Yeah, it's pretty fucked up. Your own property that you pay property tax on it, that you're not allowed to rent out rooms or even build a tiny home to have it on your own fucking property.
Yeah, I was going to buy a place in Nova Scotia, actually, and there was restrictive covenants in Nova Scotia on the property by the water. We were going to put a little tiny home because it was a nice, huge, like couple acres on the river, the Mire River, which is a really sought after place. But yeah, we found out when we were about to close that there was restrictive covenants saying you couldn't build a tiny home on your own land. I was thinking, like, why am I I'm gonna like build this property, this dream property, and I won't even be able to like put a tiny home for my brother to come stay with me and stuff. Like, I'm like, screw that. I'm not gonna like abide by these rules. I'm too much of an.
It's really stupid loopholes. Like you're allowed to then have a portable fucking RV trailer.
I couldn't even have that. They were like so restrictive, and I was like, I'm gonna get myself in shit here because I'm such an anti-authoritarian person. Like I'm like, I don't want to bend down to anybody's authority or whatever. So I'm like, I'm gonna put my house on there and get in trouble. So I'm just gonna disconnect from it.
Mm-hmm.
But going back to that original topic of the inflation, yeah, it's an interesting thing. I always like to think, what is it going to be? What is it going to be like in the next 10 years? Because they've been printing so much. Like the last 10 years, I've been learning about money and the value of money and fiat money and how fractional reserve banking works and the money multiplier and all these complicated quant math things that are basically building up giant bubbles in the economy and causing the house of cards to grow taller and taller and less stable. One thing that has continually happened is printing money. And I'm surprised, even as a Bitcoiner, I'm surprised at how much money has been printed relative to GDP and relative to the previous debt size. Even though we just had like $6 trillion be printed in the US and Canada's in worse shape than that, like in terms percentage wise. It's not unheard of. We're basically back to the same levels of debt to GDP as World War I times, like the Depression era times.
Yep. Well, look, here's the numbers. The United States printed more money in June, this June, than in the first 2 centuries after its founding.
So that's a reason why you have like institutions coming in and taking a serious look at Bitcoin as the digital gold, as the like Michael Saylor from MicroStrategies was famous this summer for putting 250 million and then another 130 or so million dollars into Bitcoin. Now, after the price rise of Bitcoin, he's probably sitting on like $750 million of Bitcoin in his treasury. He likes to call it a treasury reserve asset for corporations. And there's been people following along with that way of thinking that you should look at Bitcoin like a treasury reserve asset. if you're a corporation, you can't really easily put your corporate treasury reserves into gold. It's not that easy for you to self-custody $800 million worth of gold. But
Do we know who's doing their custody for their Bitcoin?
I think they're doing it themselves, if I'm not
Really
mistaken.
interesting.
I think they are, because they're not like, I don't think they're under the same rules and regulations as a fund, because a fund, you can't hold your own assets over 100 million. I think it is. I think it's once you get under 100 million assets on management, you need a custodian. But since he's a company, he's not a fund, maybe he can custody his own Bitcoin. I'm not sure.
Yeah.
Someone in the chat knows. It'd be nice to.
We have a super question here too.
A super question.
Taryn, I guess. How do you guys like David Chaum's XX.network with Elixir and Praxis? His team seems to be making great progress on his DeFi messenger protocol, along with the quantum resistant tech they have built. I'm going to be honest here. I have no fucking idea what David Chaum's doing.
I kind of have looked into this. I can give an opinion if you like.
Yeah, please do. Yeah.
Because like David Chaum is the father of cryptography, so a lot of people respect him. Satoshi basically talked about David Chaum in the white paper, and people like David Chaum and Adam Back and Hal Finney and Nick Szabo and all these guys are famous cypherpunk cryptographers from 70s, 80s, 90s, and they're like, David Chaum was doing Digicash, which was the first sort of stab at Bitcoin. It was the idea that you could have an internet money, but they had a centralized component. So Digicash was the centralized point of failure and point of trust in that electronic money system. And they raised a ton of money, and Hal Finney worked there. I think Nick Szabo, I think they used some of not Nick Szabo, Adam Back from Blockstream. I think they used some of his work in, or maybe he even worked for them. But they knew each other somehow. They related in their careers somehow. But even like Zuko from Zcash,
yeah,
he used to work for Digicash, and he worked with Hal Finney there at Digicash. So there is, everybody always talks about the Chaumian eCash, which is this phrase in the digital currency cypherpunk space of having digitally private, censorship resistant eCash. And so it's been a bit of like a cognitive dissonance journey for me to try to like look at XX and Elixir and Praxis and see like, why did he not just use Bitcoin? So I don't 100% fully understand what XX Elixir really does. It's pretty complicated, but basically it's like a private network that allows you to transact with any coin or currency. So you can have Bitcoin ride on this Elixir network. You can have central bank digital currencies ride on it, messages, and it's supposed to be supremely private. It's like the Chaumian, private money, private messaging system. Now, the problem is that he's printing a shitcoin, and he's selling out, because the way I look at it is David Chaum has the chance to take his weight and importance and his work and swing it towards the one shot that we have to make a real Chaumian eCash system, which is Bitcoin. And instead of hitching his trailer to the caravan of Bitcoiners and the other cypherpunks that have foregone printing their own tokens and dividing the community even further, instead of doing that, he's decided to what feels like sell out. Because when I hear him talk about it on conferences and in stuff like that, it doesn't feel like it's his project. It feels like he's just part of this project and other people are building it, and he's just kind of like licensing his ideas and his name and leveraging his name to do this ICO. Because I mean, they're doing an ICO. They did an ICO. They did a private round. It's not fairly distributed. Like Bitcoin was. It's pre-sold.
So it's an act. He's built a brand new blockchain then.
It's not a blockchain. That's the
Oh.
thing. It's different than a blockchain. I don't think it's
Got
a
it.
distributed ledger either. It's kind of
Got it.
the quantum resistant stuff is kind of nonsense, but you know, because quantum resistance is kind of a red herring. Everything in the world that is run on a computer network.
Yeah, I
like
got the white paper here, mixing the minimal real-time asymmetrical cryptographic operations.
Yeah, what the hell does that mean? It's interesting because it's got this, like, that's the whole Chaumian. When people say Chaumian eCash, it's like he created this whole concept of mixing and privacy and encryption. So yeah, it's really cool, but it sucks because he's not using it. It could have been a second layer built on Bitcoin, like the Lightning Network. It could have been a way to privately scale Bitcoin transactions, like the other cypherpunks are doing with Lightning Network.
Don't you think this is a net benefit to the whole ecosystem? Because let's say this does work, and I'm just talking blindly here because I'm just briefly to provide anonymity. They're going to go to Tor network, Onion, blah blah blah. Yeah, okay. So privacy is a major thing, but let's say it does work and they get some use cases and they've done the hard work. Wouldn't it then make sense for somebody who wants to build on Bitcoin, like, hey, cool guys, you've done all this work. I can now use this as you kind of pioneered the space or pioneered this way of doing things. I can just port it over and build it on top of Bitcoin.
Yeah, in a way, like if they build useful technology, then for sure Bitcoin can just absorb the technology. But I don't think that Praxis or XX coin or whatever is going to ever compete with Bitcoin. I think it's unfortunate.
But this is the problem. I think that's the problem at the beginning, because why even start the conversation of comparing it? They're two different things.
Well, because it is competing with the mines. It's competing with investment money and eyeballs. You know, it's like, oh, David Chaum is this famous cypherpunk, the grandfather of cryptography. Why isn't he building on Bitcoin? Like, that's where the question starts. And then they're saying, oh, this is better than Bitcoin. I'm going to get some Elixir tokens. And meanwhile, it doesn't have the same properties of Bitcoin. Yes, it has David Chaum. Yes, there's some talented people. Yes, it's an interesting thing that they're building. But if it really was meant to be a widely adopted, world-changing project,
I think it's a little bit different. So I'm just on their major page. So I'm approaching this as I've heard about the project. Truth be told, I really didn't care, never looked upon it. So this is the first time I'm reading this website. In fact, I can share the screen if that's easier for everybody. 1 second. Let me share the screen so everyone sees it. How do we do this? Screen share. Okay. Yeah. Okay. You guys see that, right?
Yep.
Yeah, so they're just calling it privatized, decentralized messaging and payments. I don't think so. They're trying to compete with Bitcoin.
Well, look, they're selling a coin and talking about this cryptocurrency. Like, this is when you watch his videos, he talks about how the world needs a cryptocurrency. The world needs an eCash. Like, obviously he's just sour that he missed Bitcoin. He didn't buy Bitcoin. And instead of like doing what Michael Saylor and some of these other institutions are doing right now, which is come in when they should come in to support Bitcoin, he's doing an ICO, raising millions of dollars and printing his own money so that he can make his own coin. I mean, that's really what it comes down to for me.
It is a blockchain. Blockchain. I think so.
Is it?
Yeah.
Oh, I heard it described as a sharded DLT or something before.
Listen, I'm in the simple camp. Do what you want as long as it's not infringing on me. I don't care what you do.
Right. But
you know what I mean? Like,
I agree with that. But like, you know, dude's asking a question about what do you think about this? I think it's a bad investment. I wouldn't invest in it. I think just buy Bitcoin. And yeah, man, if this guy can build this technology out and his team can use the 10 million or whatever it was that they raised so far, and they don't get fined by the SEC, and maybe they build some useful technology, and maybe he's not just selling out, it'd be great. Bitcoin can always adopt whatever layer he's built and put it on Bitcoin, and it can be used in a way that benefits the world. Because right now, I think this is just a kind of like a burnout, flame out cash grab by a once former great person that's now just selling out to print shitcoins.
Hey, maybe he needs money, bro. We don't
Probably
know. We
should have
don't
bought
know
Bitcoin.
See, that's another okay. So that's another thing. So this brings up a good conversation as well. Eventually, there'll come a point where it can be the most hypothetical numbers. Like, let's say Bitcoin hit, I think you mentioned before $1 million of Bitcoin, right?
Yeah.
Okay, we'll use that number, whatever. It can be 10 million. I don't care. The number is irrelevant. It's more or less the context of the conversation. So let's say Bitcoin gets to $1 million, and we're having this conversation again. And actually today, pretend hypothetically Bitcoin today is $1 million.
Okay.
It is very, very hard then to sell the narrative to new people that Bitcoin is going to continue increasing in value. You know what I mean? So there's an ROI multiplier. So when it hits a certain velocity and it's absorbed as much capital as possible from outside of the world, new people entering the space will be like, I'm gonna go then into something else.
Well, at that point, you're talking about the space as if it's anything different than investing. At that point, it's like it's going to be a global reserve currency. So, I mean, it's not going to be the same as it is right now. This is like still the early days, really the gold rush days where people are trying to stake their claim and get some while it's cheap. I agree with you. At some point, it's going to be like, rather than presenting Bitcoin as this high growth alternative asset class, it's just going to be money, and we're just going to denominate things in Bitcoin. Everyone's going to be using
do you believe Lightning Network is the solution to take Bitcoin into payments?
I think, I don't know what the solution is going to be long term. I've kind of like a nuanced view on this. I think that I wish Lightning Network was the solution, but I also wish that people like David Chaum would build their solutions on Bitcoin, because we have a better chance at the mission, completing the mission of having a censorship-resistant peer-to-peer electronic private cash that competes with central bank currencies and doesn't allow central bank digital currencies to become the norm like they are in China, where everything you do is surveilled and you can have your access to money just turned off if your social credit goes down. I think by having things like Elixir and DeFi and all this stuff take away from the value of what Bitcoin brings to the world, it's splitting our focus, and it's not preventing, but it's hurting the chances that we're going to be all working together to succeed at this mission of having a real decentralized peer-to-peer digital gold cash system. So I'm excited that there's a lot of developments happening in Bitcoin. Like there's the Taproot upgrade is coming soon, and Schnorr signatures are coming soon. There's the Lightning Network. Lots of interesting developments are happening in Lightning Network to solve the problems that we currently see. Like there's a bit of a user experience problem with using Lightning to get on and get off, but they're solving the problems with that. Like before, it was like you had to set up your own node and then you had to open a channel, and now there's things like submarine swaps and AMP, like automated paths and stuff like that, that do all that stuff for you. So you can just make one transaction, one on-chain transaction to a Lightning wallet, and it does everything for you. And you know, you're still paying a fee to get on and a fee to get off, but it's like the same as paying a fee to open up a bank account and a fee to like close the bank account or whatever, you know, monthly credit card fee. There's going to be fees, but that's not unrealistic and unreasonable. So yeah, I'm hopeful that Lightning will be the solution that we can scale up. There's so many smart companies working on Lightning, like Square Crypto is working on it, Lightning Labs, Async, MIT. Like there's all these Blockstream, all these companies, really smart people are working on this. There's thousands of Lightning developers. everybody kind of like gets sucked into the DeFi Ethereum things, seeing the thousands of developers working there. But I mean, there's a lot of working on just focused on.
Well, the reason why they get sucked in is very simple: is incentive models. You make a shit ton of money, man.
Yeah, you can print your own money and like make
not even just printing
lots of money.
Not even the teams. I'm talking about people who want to deploy capital, who understand the space, make fucking money.
Well, that's a bit debatable. You can make money, but you can also
anything. You can also lose money in anything. I put money in the stocks. I can lose it. I buy Bitcoin at the wrong time. I may, like in 2017, and if I didn't have gigantic balls to hold it for 2 years, I would have sold it as a loss. You know what I mean? Like,
there you go, man. That's what you got to do.
2 years of that.
Strong hands. No, listen, I agree with you for sure, but you can't dismiss the other risks that are with Ethereum and DeFi. Like every week,
no one's dismissing them. I think people who are in it, like who really understand it, they understand the risk that they're taking.
I wonder though how much. Okay, like I honestly, and you know me, man, I know DeFi really well. I really am seriously doubtful that anybody has really made any money in DeFi profits over holding Bitcoin if they didn't, 1, print their own token, 2, get insider information about when this DeFi token was going to launch and get an insider deal, or 3, just get really lucky. I mean,
I personally know funds and people who got in really early before DeFi was even a thing, like a year and a half ago.
Yeah, and
made a fucking killing.
And they printed money. Like they
no. They're not part of the team. They were just outside investors.
Right. So they got, sure, like they had asynchronous access, and it's not like.
But they also took a risk where it was nobody talking about it. Everyone thought this was retarded.
For sure.
Like imagine you have this stupid idea, this decentralized synthetic thing that does blah blah yakety yak whatever. Give me $200,000. Okay.
Yeah, I mean for sure that's hedge funds, that's like VC funds, that's speculation. Sure, that's going to happen. But the problem that I have with it is when people use those examples and say and use that as a reason why they do their YouTube videos on like how to make money with DeFi, or like, shilling all these altcoins to people, because that's not your experience that you're going to most likely have as a viewer or listener of the show.
DeFi
most people are just going to get wrecked. Like they're just going to they're going to lose their money in these pickle jars or these EMN hacks or these exploits or these BZYX smart contract exploits or flash loans or whatever. DYDX. If it's audited by CertIC, run.
Oh, I'm saying these days, if it's audits at this point, audits they're not even worth it, man. They're useless. But remember, a lot of these ones aren't even. A lot of these exploits, as of late, aren't even hacks. They're Oracle exploits. So the code itself is fine, but how they've designed it created very simple exploits for outside sophisticated.
The code is fine. It's just when they use the code, it's bad.
No. The code itself is fine, as in like people, it's a misnomer. It's not being hacked. It's actually behaving exactly as.
Yeah, it's exploits of the logic of the smart contracts that are being used in ways they weren't originally.
Yeah, so I hate when people say it's hacked. No one broke it. No one hacked it. Literally, it's being used as it should be used.
Yeah, but I mean, there are actual hacks too. Like,
yeah.
Like Ethereum lost to hacks before. Many people lost a lot of money to like exploits of the code of Ethereum and parity multi-sig and stuff. So, just recently something went down and it kind of hard forked, an emergency hard fork or something?
No, it was emergency hard fork. No, that never happened.
What happened? Infura went down or something like that?
Infura went down. So Infura runs, because it's very costly and timely to spin up your own node. And so basically everybody uses Infura, or if they don't use Infura, they'll run their own nodes on like AWS or Google, because it's just much easier. And so this isn't something new. This has been a pain point for a very long time in the Ethereum ecosystem, where we should start. And in the same conversation we had earlier with Bitcoin nodes, there should be easier, better ways that anyone can start spinning up the nodes to sync faster, as opposed to taking a week to sync. I don't know how long it takes. I'm assuming it takes a long time to sync. And B, the actual financial cost of running that node. But if you're a team, let's say you're running a crypto project, I think it should be mandatory for you to bite the cost to run your own node, regardless of how long it takes or how much money it is on a monthly basis.
Yeah, I don't really think much about Ethereum node stuff. I think node running is for decentralization, like censorship-resistant purposes, and it's not the ethos of DeFi and Ethereum to care so much about resisting the government and resisting overreach. And the ethos of Bitcoiners and Bitcoin is pretty much that. Bitcoin was born on a political statement against central banks printing money and bailing out Wall Street. And that was like kind of the mission of Bitcoin. It's like an alternative form of money. And I look at Ethereum and DeFi and stuff more as like a Series E tech stock mixed with this new technology.
Yeah, it's completely different culture set. I agree.
Different culture, different, like, it's more of like a move fast, break things, like Silicon Valley mindset, startup people go into it, and sure, whatever. But when it comes to things like with Elixir, again, I would recommend, if people want to go and look at something interesting, there was I tweeted about it. But how can I get people to watch this? It's really cool.
Yeah,
video.
well, you can send me the link. Is there a chat here? What? This fucking program doesn't have a chat? Oh, I think it has a chat. Yeah, it has a chat on site. I'll do share screen.
I just tweeted that out.
1 second.
Like in last year, there was this. It was the Future of Blockchain conference, and it was Nick Szabo, David Chaum, and Adam Back from Blockstream.
Yeah.
And it was an awesome conversation. So,
let me pull it up.
Go watch that. It's a really interesting conversation.
One second. This one right here, huh?
Yeah. Search YouTube, Future of Blockchain, Nick Szabo, Adam Back, David Chaum, and then that'll bring it to you.
Cool. All right.
Great. So that will round it back to the conversation topic of Wall Street. Like, if people learn about why it's important to run their own node in terms of Bitcoin, and know why censorship resistance and scarcity is important, then I think we can more properly guard against the influence of Wall Street, which is more like the Ethereum mentality, which is just like profits and business and whatever you got to do to make the thing more valuable, even if it's like sacrificing the principles that it was founded on. Bitcoin has stayed true to its principles since it was created, and every year that it keeps churning out more blocks and doesn't fork and stays the most hard form of money, the most scarce form of money, I think it's just going to continue cementing its position as with the Lindy effect of the crypto. Like, Bitcoin is crypto, right? But crypto is really not Bitcoin. So it's like there's Bitcoin, and then there's other things like whatever, Monero and stuff that are trying to be money too, and like private transactions. Even Elixir might fit in there. But then there's crypto, and like all that stuff is kind of like a different conversation. But Wall Street is going to try to influence Bitcoin in a way that merges crypto with Bitcoin more. I feel like that Ethereum is a much better suited like currency or whatever for people that have the mentality of most Wall Street business people, because they can call up the company that runs Ethereum basically and like try to gain influence, or they can, try to buy Infura, you know what I mean? Or like try to acquire these big teams of developers like Consensus and stuff. Like, I wouldn't be surprised to see Consensus be bought by like JP Morgan or something like that at some point. And that's not really at all what Bitcoin is. But you're going to start seeing Wall Street people want to give up the resistance, and like give in to government wanting to enforce certain KYC rules, or the government is not going to want to see Taproot and Schnorr activated and Dandelion or all, any of these privacy enhancing things that allow Bitcoin to be more anonymous. The government's not going to want to allow that to happen. So Bitcoiners will stand up against that, and they will use mixing, and they will use PayJoin, and they will use all these technologies that enhance privacy and protect individual liberties. But the big Wall Street investors like Michael Saylor, who just put in $450 million and now has like $750 million, or any of these big giant funds that are going to put $1 billion into Bitcoin, they're not going to really, I don't think they're going to really stand up against the government and regulations. That's just my feeling. So I think we just got to be ready for the next fork or the next split or whatever. Because
you think I think it's going to happen.
I don't know. I think it's probably going to have the same type of effect that the fork wars of 2017 had, which is they're going to try to exert their influence. They're going to try to say, look, we own 10% of all the Bitcoin or whatever it is that they're going to have. And they're going to try to say, we represent all the businesses, the corporate treasuries, the influence on the billionaires. We represent the new class of Bitcoiners. We're taming Bitcoin. We want to comply with the government so they don't ban it. We don't want our Bitcoin to get banned. So they're going to take the stance of like, we are the new Bitcoiners, and they're going to try to exert their influence. And all the old class of libertarian, anarchists, early Bitcoiners are going to do what they did in 2017, which is like throw up the no2x hashtag, or, it'll be the no whatever hashtag, and they will be activists against these new usurpers, the centralizers, the people that don't understand what they're doing is actually destroying the value proposition of Bitcoin, which me and you agree on, which is like it's censorship resistance.
You mentioned PayJoin and mixing. Is there like some simple hygiene practices people can do today?
Yeah, man, it's download Wasabi wallet or Samurai wallet. If you're a merchant, if you're an entrepreneur, if you've got a website or something where you're selling products, you should set up your own BTC Pay server instance, and accept Bitcoin and turn on PayJoin. PayJoin is a great feature that allows you to do this David Chaum style mixing with Bitcoin. So, for people who don't 100% understand the way Bitcoin works, like if you got one Bitcoin in your wallet, it's most likely like 10 different UTXOs. And these UTXOs are like think of them like balls on an abacus or whatever. Together they make up one Bitcoin, but they're moving around and back and forth. That's what happens when you pay somebody with Bitcoin. You send the whole UTXO to that person with a return amount. So if you got one Bitcoin, right, a UTXO of one Bitcoin, and you owe somebody 0.1 Bitcoin, it's actually a transaction that sends 0.1 to them and 0.9 back to you. So PayJoin allows merchants to join in this pool of all these random people making transactions to find the UTXOs that are more efficient and fit together. So you'll get a transaction back from someone else, and it's really hard to follow the trail of, it went in and it came back, because it's going to go in, it's going to go to somebody else, and then theirs is going to come to you. So it's like a really smart way to obfuscate the trail of UTXOs. Wasabi is a way to properly clean your Bitcoin. You don't want to be leaving privacy leaks everywhere when you're using Bitcoin. So you can use Wasabi to like join these mixing rounds, basically, where like lots of people from all over the world are exchanging UTXOs with each other, and you get them back in like 0.1 Bitcoin chunks. And if you're going to be using that, it's good for your privacy, but you got to be careful that you don't leak data in other ways. if you're really like, if you're in a place where you need to use mixing and you need this for your safety, then you don't want to mix a Bitcoin and then pay somebody with some Bitcoin that's tied to your identity and some of your mixed Bitcoin, some of your clean Bitcoin, because then you're just you're linking them together and they can just follow all the rest of your trails or whatever. So I'm a big fan of like encouraging people to go to, like, you know, if they want to get some Bitcoin, Bull Bitcoin does mixing by default. Like, they clean their Bitcoin and give it to you. I like Giacomo Zucco's terminology there. A lot of people think like Bitcoin that was on Silk Road or that's used to buy drugs or whatever is dirty Bitcoin, but he looks at it like KYC linked to Bitcoin is dirty Bitcoin. Like, clean your Bitcoin and clean off that dirty KYC linkage, clean off all those privacy leaking trails, run it through Wasabi or Samurai Wallet or PayJoin or something like that, and destroy any of these leaks, because these vultures, these chain analysis vultures that will try to like dox anybody who's using Bitcoin and identify who's using Bitcoin and report it to the government or whoever they're reporting it to. Why let it be dirty, right? Like, in that way, it's dirty. Like, clean it up and make it nice and clean and fresh and have no links. Sure, people will call it tainted because it'll be mixed with small UTXOs that are probably related to some sort of crime, like a drug purchase or whatever. But fungibility is one of the most important properties of a money. So there's more traces of cocaine on dollar bills than there is on Bitcoin. So it doesn't mean that the dollar bill is worth less. So the more that people use like mixing and think about this as a way to protect the fungible properties of Bitcoin, the more valuable Bitcoin is and the more resistance we can put up when they try to like put these limits on Bitcoin.
I think even this more simpler, you mentioned something interesting, like a lot of these wallets have built-in features. It almost makes sense if the whole ecosystem by default has these features built into their services.
Oh, I would love that, man. You're speaking my language. That's why I love Bull Bitcoin. Like, me and the owner of Bull Bitcoin have gotten into it quite a bit online, and he called me like scum of the earth and shit like that because like
what?
Yeah, man. Like, he's a real activist kind of guy. And I was recommending people wear masks, and he's like super against COVID. He called me scum of the earth, like, because I was telling people to wear masks or whatever. And so, but regardless, you know, whatever people want to believe, whatever people want to do, it's their own prerogative. But even though I had, like, me and him have a personal vendetta, I don't really care to talk to him anymore. I mean, I'd gladly sooner just make fun of him if I ever see him, but like, I 100% believe in what he's doing. And so I'll still recommend people go to his website and use his service, even though me and him don't get along anymore. I still think it's an awesome spot for anybody who cares about privacy and who wants to acquire Bitcoin in a way that respects your privacy.
Do you see more wallets like Wasabi and Samurai doing what they're doing?
Well, that's why PayJoin is exciting, because BTC Pay Server was an alternative to BitPay. BitPay was the biggest, and they still are kind of the biggest payment processor for merchants to accept cryptocurrency, but they chose to go on the big block side in the 2017 fork war. You know, they chose to support the SegWit 2x version of Bitcoin, which was the corporate miner version of Bitcoin. And you know, it was like, that was the moment when one of the Bitcoiners decided that, you know, this is not right. This is not why Bitcoin was created. So we're going to create an alternative. So they created BTC Pay Server, and it allows anybody to accept their own Bitcoin payments. Any merchant, any entrepreneur who wants to accept Bitcoin can use BTC Pay Server, and now they support this mixing thing. So yeah, man, it's a growing trend for sure. And even ETH has that with Tornado Cash.
Great service. Yeah. Hopefully other wallets can incorporate that natively within their UI. UX.
Oh man, I would love to see that. All the wallets. It would be great to see all the wallets doing that.
We should maybe then do like a crowdfunded wallet.
I'd be down, man. I had a couple ideas for some wallets.
Yeah, no doubt. I got from Solo TV. Been watching you since 2017, bro. You do great content, especially when it comes. Thank you, man. I appreciate the love. Right back at you.
So you got a few people in your chat here, Amir, that are skeptical that Bitcoin will ever become money and that they prefer gold. Few
Okay,
people.
so one, it's I don't even like comparing those two together because both of them have different properties and features. The thing with gold, yeah, most people bring up this conversation when it comes to supply and demand, as we see in the chat as well. So yeah, gold roughly we know supply, but we don't know 100% because new mines can be discovered, and no different than what De Beers does with the diamond industry. They can control the supply of gold and production. Also, not to mention is if we find an asteroid out there that has unforeseen amounts of gold, which transforms the supply as well. So the supply dynamics is very different than Bitcoin, where we know for a fact what we're getting and when the issuance is going to be. But the conversation as a whole, trying to compare those two, I don't see why we're even fighting and arguing. I think they're quite beneficial for both each other. Like, I don't know why people say, why is it so binary? Like, why is it I can only have gold or only have Bitcoin? I just don't understand.
You know, it's funny. The guy that got me into Bitcoin was this dude, David or Da Vinci Jeremy.
Mm-hmm.
You know, I always like people had been asking me, and I forgot about this for years. And then I finally remembered it was actually a video. I was trying to get gold. So I was an entrepreneur. I think I shared this before on your podcast where I kind of earned some money doing this Facebook game business. I got some wealth doing that, and that's when I started going down the rabbit hole of like, okay, I don't need all this money. I should diversify. And so I started looking into money a bit more and realized that I got to get some gold because this dollar thing keeps being inflated and it's an invisible tax. It's just going to inflate away all my wealth if I keep it in cash and dollars. So I started looking into gold and I started learning about the value of gold throughout history and why the gold backed dollar was better than the fiat dollar and all that stuff, right? So this guy starts doing these videos on digital gold. This was 2011. Bitcoin at the time was like $1 or something like that. I found him a few months later, 6 months later, whatever. It was like $5 when he was talking about, you know, you got to buy some Bitcoin. It's digital gold. So I was getting some silver. I was getting some gold, and then this dude starts talking about digital gold and how he's mining it with his computer and all this stuff. And I was just so excited. So I got some digital gold, and this dude just put up a video on his Instagram like a week ago of him selling all of his gold. Like he brought in like $1 million worth of gold to the bank and sold it all and bought Bitcoin with it at like 15K a couple weeks ago. Did I send you that video yet?
No.
You should play it, man. It's pretty funny.
How long is
good.
it? We'll play it. We'll play it.
Oh, it's not long. It's just like a few minutes long of him going into the bank and selling the gold.
If it's copyrighted and if I play, they're going to take this video down. Let me see what it is.
It's just his Instagram page. His
All
personal,
right, it's fine then.
personal Instagram page. Copy link.
Yeah.
Okay, I'm gonna have to send you this on Telegram because I can't copy.
Yeah, that's fine. Let me pull that up.
There you go. So while you're getting that, let me just say that I think that dude's right. Like gold is a valuable thing. It's never not going to be valuable. It's just that gold is a $7 trillion market cap right now, $8 trillion. Bitcoin's like a 300 billion market cap. So this guy that's been investing in gold for almost 2 decades sees the value of Bitcoin way more than his gold. So there he is with all
the gold.
Yeah, he had 10 kilograms worth of gold that he had accumulated.
Wow.
And he was just like, this shit's too heavy for me to carry around anymore. I'm just gonna sell it for Bitcoin. Why do I need all this gold?
10 kilos, huh? Gold
it was
price.
Like in Canadian dollars, I think it was $1 million.
$1 million, eh?
Something like that.
Yeah.
So, you know, like Bitcoin has all of the properties of gold, except one extra one, that it's natively digital.
Mm-hmm.
The one thing that it doesn't have is that it's not been used as money for 5,000 years. So that's why Bitcoin is only 300 billion. Like, I did a survey recently, maybe 6 months ago or whatever, where I asked people of different age demographics that Ron Paul question of, if you were given $10,000 and you had to hold it for 10 years, would you take it in stocks, gold, Bitcoin, or cash? And the majority of the people chose cash and gold.
Cash.
Cash and gold, yeah, at the beginning
Yeah.
of the survey. And then I went through the 17 sort of questions to ask them follow-up questions, like, well, why do you think, or how much do you think if you had, what was the question? The first question was like, if you had $1,000 in 20 years ago, do you think it would buy you $1,000 worth of stuff today? And everybody was like, yeah, of course. And then I'd show them the data. Well, actually, the inflation rate is so and so, and the purchasing power of that dollars has gone down to 800. So you know, $1,000 saved over 10 years is actually only worth $800 in purchasing power, where 1 ounce of gold has held its value, and you can still get 1 ounce of gold's worth of stuff in 10 years. So then you had a little bit more people sort of drop off the cash answer. And, you know, you keep asking them, keep educating them, and they realize after the full gamut of information about how bad stocks have done comparative to their purchasing power, to the dollar, and how poorly the dollar has held its value over 100 years.
Mm-hmm.
Like, the majority of people thought that the dollar gained purchasing power over the last 100 years. They thought that 100 years ago, if you had money in the bank, that you could buy more things with it today. So people just generally aren't aware of how quickly the purchasing power of dollars is eroding. And at the end of the survey, the majority of the people chose Bitcoin and gold at the end. So it was only like like 10% or something chose Bitcoin at the first time they were given the option to get this free $10,000 gift. And then at the end, it was Bitcoin and gold. And the biggest change was in boomers. They went from gold to Bitcoin.
Wow, really?
Because boomers, that's contrary to this belief that boomers are just a lost cause and we should just be focused on Gen X and Gen Z and Gen...
No. Side note, I finally convinced my mom. I showed her how bad her RSPs are and how she gets no returns, and she's not a money person, you know, just works hard, etc. Coming up retirement. Actually, sorry, just retired. She's retired last year. And I finally told him, like, and I took out her portfolio, and her guy at the bank was talking, and I'm like, this guy's a schmuck, and he's an idiot, doesn't know anything. Like, this guy's paid for you to keep your money there. He's a fucking moron. And I just showed her, like, the standard interest rate she's getting, and she's like, and kind of finally hit her. She's like, oh. And then for the longest, like, she knows I'm in crypto, and then I'm like, there's better things out there.
Nice. Yeah, with education, with proper education on the way money works and the financial system and the previous history of, like, one of the big things was, like, if you had invested in the S&P 500 in the 1970s and you held it until now, you got like a 32x or something on your returns. Like, you're way up in dollars, right? But when you actually measure the drop in the purchasing power of dollars since the 1970s until now, you're only up 3x in purchasing power. So the dollar has lost, then that's like 4% a year. So people who think they made so much money in the stock market, they got a 32x in 50 years, they actually only got like a 3x, and they're only making 4% a year. While meanwhile, gold has held its value all through this time, and gold is likely to continue to hold its value. It's just that Bitcoin is likely to go up 50x if it competes with gold. If it's going to be, you know, gold is probably going to go up 2 to 3x over the next 10 years because there's going to be a flight to scarcity and scarce assets. If Bitcoin keeps up the pace with gold and becomes 20 trillion market cap like gold in, say, 10 years, that's almost like an 80x. So for that reason, it's like, it's so attractive for younger people that are inheriting wealth, like you're saying earlier, the generational wealth transfer, the $60 trillion wealth transfer that's happening. man, young people don't natively grok gold like they natively grok Bitcoin. Like they just feel naturally drawn to Bitcoin. That's what my survey showed. Like it was the millennials and the Gen Zs that chose Bitcoin at the beginning, and they even chose Bitcoin way more at the end. But even boomers chose Bitcoin once they realized that Bitcoin wasn't as big as they thought. Most people think they know a lot about the markets, and that was represented in the survey too. People answered, "Yes, I know about this." Or
Where's
yes,
the survey? Is this public? People can see this?
yeah, I wrote about it on my my Medium. I could post it to you.
Yeah, post it.
But that was the most interesting thing too, is that rich people felt that they knew more about the markets than they actually did, so they would answer confidently, and they were wrong more than poor people. So rich people thought they knew what was going on, but they were wrong more than poor people, and poor people were more likely to say, "I don't know," but I'm willing to learn. So that was another interesting thing, because a lot of the rich people felt that the dollar gained purchasing power, and like stocks was the best investment. Yeah, man. Like lots of rich people just don't have a clue about the value of Bitcoin. People, like lots of people felt
I'm very curious. Are these like, when you define rich, we're talking like multi-millionaire rich, or like upper middle class rich? Like, what are we talking about?
upper middle class, like millionaire, not like billionaire rich.
Self-made, would you say?
I didn't get that far into it. I just posted you the link there. Someone says, "Yo, Brad, Zizu Skate. What's up, Zizu Skate?"
Here it is. Yeah.
So that was the biggest thing, man, is that like people felt like they missed Bitcoin. They felt like Bitcoin was already as valuable as gold, and it was already up there with gold. And like, why would I get Bitcoin when it's already gone from $1 to $10,000? So they felt this feeling of missing it. And then when I explained to them that like actually Bitcoin is very, very small compared to like Apple's market cap.
You showed me a stat earlier. Actually, you didn't show me. I saw it, but in Canada we have a fund, QBTC, where Canadians can invest with their TFSA, tax-free savings account. Obviously, you don't control your Bitcoins; they have it. But I think, what was it? You said like 14,000 Bitcoins they have or something.
Yeah, they're doing big numbers now. They're up to
big numbers. Yeah.
What's that? $400 million.
So that's a lot, man. And I wouldn't be surprised as more, I wouldn't say Zoomers, but millennials really don't have disposable income, so they're not really using their TFSA. So it's people who have cash who use their TFSA to invest in this QBTC fund.
Yeah, like if you're the average Canadian, millennial, young person or whatever, and you got TFSA room, most likely you're thinking like, why would I invest in a stock market? It's probably going to go down. It's a scam. Like you probably distrust it. Or maybe you're one of those people that are on Wall Street bets and you're like using your tax-free savings room or whatever. But regardless, you should put some of your tax-free savings account money into the QBTC ticker, because it's tax-free gains on Bitcoin, on the representative price of Bitcoin. Now, the strategy is don't just put it, like if you were going to get, say, 1 Bitcoin, don't just put it all in your tax-free savings account. I'd say like half should go into real Bitcoin, half should go into there until you've maxed that out, until what you're comfortable with, and then just accumulate real Bitcoin. You don't want to have all your Bitcoin exposure in this fund because it's not real Bitcoin. You don't have the keys. You're getting the exposure to the appreciation of the price of Bitcoin. They have the Bitcoin. So, I mean, like, it's not like you can redeem your shares.
No, exactly. I was going to bring that up. So, and if you do sell, you're just selling it for Canadian dollar. You're not actually receiving Bitcoins.
Right. It's a exchange traded product. So it's just like trading around. People are going to buy and sell, and you don't actually redeem for Bitcoin. So yeah, it's a bit of a tricky one because like I don't like telling people to buy paper Bitcoins, but the tax benefits if you're looking at it purely as an investor and maybe you don't care about the censorship resistance properties or the free speech money aspect or the ability to buy psilocybin on a dark net market or something like that and not be tracked, if that's not your use case and you're just looking at it as like, wow, this is like a generational investment, I don't want to miss out on that $60 trillion wealth transfer going into Bitcoin, then you just get some exposure to the price of Bitcoin through QBTC.
Yeah. All right, man. I think we're going to wrap it up. We've been jamming for an hour and a half here. Is there any final words you want to tell everybody out there?
Yeah, everybody go follow Gulag G.
Gulag G?
Yeah, Gulag G. He's teaching people about the Great Reset.
The Great Reset. Yes.
I'm just kidding. I don't know. Your chat is very active. I was trying to keep pace with it, but man, people are going in there.
Let them go at it, man. It's a melee.
I don't think we shouldn't end the stream, man. You got guys having like heated debates inside of your chat. Once you end the chat, how are they going to finish their conversation?
There should be an option to let them on here and start debating it out. And then we should have bets on there. Who wins the debate?
Yates Network is taking the position that 2 to 5% in Bitcoin is the good starting point. There's got some gold bulls in there that are defending gold. It's a nice heated debate in there. Some guy wants you to do a video on affiliate network stuff.
Marketing, yeah.
Marketing. All right.
My audience is great, man. They're come in all different shapes, size, and colors.
One of the interesting thing I'll say before we leave that your audience would be good for your audience to know, because it's mostly guys in there, that in my survey, it was actually like women were more, we all think like kind of natively that women are not interested in Bitcoin investing or whatever, but it wasn't true. In the survey, women were more reserved and more conservative about their investments, but in the end, they actually were more honest about what they knew and what they didn't know. And it was the men who were like more confident and more risk taking, but they didn't know as much as the women in terms of the investments.
Not a surprise.
Yeah, so it was really interesting to show just that maybe the narratives that we talk about when it comes to Bitcoin, it doesn't speak to women, but like half the population is women. So we got to be more thinking about more inclusion about like your language and your speaking if you want to evangelize something to half the population. Maybe the crypto bro language and stuff like that I see in a lot of streams and a lot of Twitter profiles and stuff. It doesn't really speak to half the population. So my podcast, Magic Internet Money, is more like I try to be like a centrist or middle ground viewpoint, talk about other issues besides Bitcoin, and just leave it at that.
Cool, man. Awesome. People want to follow you. What's the best place to catch you?
Twitter at Brad Mills Can, or like check out the podcast Magic Internet Money, and you'll see great guests like Amir Rosic on there.
Brad, always a pleasure, brother. Talk to you soon.
Talk to you later.
Cheers.